Hey everyone, how's it going? Today is April 14th, 2023. I missed you last week, decided to take Easter off, but I'm back, and I'm back actually at my cabin. I think I did a stream here like a year and a half ago, and it was okay, but it's funny because I don't really have internet out here, so all of the streaming is like basically just using my phone as a router. So if there's any problems, you can blame my phone for not being able to handle all the data that I'm throwing at it. But if you can see me, that's good. I assume everything's working. We're going to talk about some interesting things that have happened this week. Everyone is just shit talking the US dollar as of late, including France, Brazil, obviously some stuff going on in Saudi Arabia. And the big question that I think a lot of people have is like, oh, what does this mean? Does it mean that the renminbi or the Chinese yuan is going to be the next reserve currency? Is, US dollar dominance finally fading? And there's a lot of speculation and ideas out there, but I want to specifically cover why I personally don't think that the Chinese yuan is just going to step in there and become the next global reserve currency. I think there's quite a few good arguments against it. And we're also going to cover just things that happened in the market over the last few weeks. I know that gold has been ripping, Bitcoin and Ethereum, congratulations if you held on from all the FTX drama. Speaking of which, they announced, or the head attorney of FTX announced some interesting news about the exchange. We're going to cover all that and so much more in today's show. So yeah, thanks for tuning in. Give the video a like if you're watching. It helps it reach more people. And without further ado, let's jump into the news. Alrighty, so first things first, we're going to jump into some of the charts here. And the first one that I have is the S&P 500. That downtrend line is looking a little bit old at this point, since we've kind of firmly broken out of it. But, there's been some differences between the S&P and QQQ, and we know basically a lot of that has to do with all the, the banking crises. The S&P 500 has a lot more exposure to the big banks as opposed to QQQ, which is more tech heavy. And in terms of tech stocks, they've been just ripping. It seems that, without going super deep into the data, that inflation has turned a corner. It is coming down kind of as people's projections showed. And even producer price index, so producer costs for things, commodities, has come down quite a bit as well. Does that mean that we're going back to 2%? Does that mean we're out of the woods for inflation? I don't think completely, but it's kind of this sigh of relief that the market wanted, in addition to kind of this assurance from central banks and the government that they were going to backstop any sort of banking crisis as well. So all those factors combined, inflation turning a corner, even though that could possibly mean a recession as well, and central banks stepping in, have been just really good for tech stocks in general this last week. So zooming in a little bit, last week we had a little bit of consolidation, but very healthy on tech stocks. And we broke lower this week, but didn't really get anywhere. So far, things are looking pretty decent all around, if you're in QQQ. A few things to just keep in mind. Of course, when I look at indexes, a lot of traders will use volume, like, oh, if the volume's low, then maybe it's a fake rally. And I don't really like to use that metric. I think that indexes can kind of passively grind upwards because there's all sorts of flows coming into them on the regular. So I don't like looking at volume as a metric, and I think that the pain trade honestly is still higher because I still think a lot of people are caught off guard from the panic selling and the tax selling from last year. The pain trade is higher. However, one thing that I am watching for is the VIX. And so the VIX actually pretty much on the verge of a key meltdown this week, bringing us kind of to the lowest ranges that it's been in since about 2021. So the VIX, which measures volatility, options bets, really, really historically low right now. The thing is, though, is for the past year and a half, if you bought or if you shorted, something's making noise. Oh, you know what? It's my ice pack. I have my phone on an ice pack, and it's slowly melting it right now because it's getting so hot. So that little like squeak in the background, that's what that is, if you can hear it. Sorry, back to what I was covering. The VIX index, which measures volatility, broken below a key support here. A big part of that, I think, has to do with just this slow melt up in the indexes, the relative strength. However, when I see VIX this low, it doesn't give me full confidence in like swing positions. I'd rather, if I'm going to, let's just say, pick up an index position that I didn't get beginning of the year, I'd like to see some sort of like panic event similar to the banking crisis, where I get to buy something like an index at a, a cheaper oversold price. That's just me. You could just passively invest, and it is what it is. But the market's looking like overall, to me, for the first time in a while, in the clear. Best that it's looked basically since November of 2021. Another thing that really helps this is the dollar. The dollar had this little rally on the back of some of this banking panic, but basically, I believe the day that Silicon Valley Bank announced they had a crisis, it's just been down ever since. I don't know if that's fully correlated. The DXY measures the dollar relative to other currencies, but I think that assurance from central banks that they will do whatever they need to do to assure the stability of the financial system, even if that includes, shoring up as much liquidity as possible. It's leading the dollar to kind of like a lower dominance relative to things like the euro or the yuan and stuff like that. So I like what's happening with the dollar in terms of, in one sense, being able to confidently put money behind Bitcoin or gold or these other assets, because the way that it looks right now is, sparring some sort of black swan event happening in the next few months, the dollar is going to either be going down or range bound. It's a very clear lower high that was set there. So yeah, technical jargon aside, I think that parabolic blow off top of the dollar was kind of confirmed this week with this next leg of the downtrend kind of beginning. And then gold. Let's talk about gold. Obviously, Bitcoin doing really well. We'll jump into Bitcoin right away, but 32.5K is the only other resistance I see on this until about 48. So I'm not shorting Bitcoin. I'm not shorting Ethereum. I'm not shorting any of these things. I think it's just, if you have some, you're good to go. If you're looking for a dip to buy, look at the EMAs or something like that. Your choice. But I think these things are kind of in the clear to grind higher for a bit. And as soon as I said that, that probably marked the top. Gold as well. Big rally this week, but big pullback today. I still see this clearing all-time highs probably in the next month or two. Looking really good, positive for the first time in a while, Okay, enough of this technical stuff. This isn't a technical show, but I just thought, because I hadn't covered this stuff in a few weeks, I think even the week before when I did do my live stream, I didn't cover this. Brief catch-up. Market's looking pretty good, safe for the bulls. That's just my 2 cents. All right, let's jump into the news. So this week was just marked absolutely by all of these leaders and different entities around the world kind of denouncing the US dollar in one way or another. And so, for those who haven't caught up to speed, the US dollar is the world's reserve currency. Almost every single commodity you can think of, especially oil, but copper, food, rice, grain, whatever you can think of. When countries want to intertrade with each other, it doesn't matter if, one country has the rupee and one country has yuan. When they want to do trade through, whatever means commodity-wise, they're using the US dollar. It's just easier to have kind of one settlement currency. And so how does a reserve currency even get established? Well, it gets established primarily, if we look back historically, by a country that kind of has a wide-spanning empire of, different places around the world. So, before the US dollar, it was, the Dutch that had their reserve currency, and then France. We know France has colonies everywhere, Africa, across the globe, basically Canada. And then after France, the UK kind of took over as the empire with their reserve currency, the sterling or the pound. And of course, they had empires everywhere. The US, not quite the same kind of scope as like the UK in terms of empire, but they basically got a big boost in their economy and everything there after World War II. And essentially since then, they've just been the biggest consumer of everything in the world. And so because of that, they've also enjoyed reserve currency status for about, I want to say 90 years, about 90 years. Basically since the end of World War II is when most people kind of agree that the US dollar became the world reserve currency. And so, rise of Bitcoin, rise of China, all these things, downturn of, US culture, a lot of like political instability. Everyone's looking to kind of these maps that people like Ray Dalio make that kind of say, oh, could the US be a nation in decline? And if so, what naturally comes next? Losing reserve currency status and all the knock-on effects from that. And so I've always believed that, yeah, there's no way that the US is going to have reserve currency status forever. However, I can't really give you a timeline as to when that's going to disappear. But some really important tenets of having a reserve currency is that it's as neutral as possible. That the issuing country that is in charge of this reserve currency cannot just cancel transactions in it, or bar certain people that they don't like. And the U.S. has done that, but never to offensive degree. The reserve currency should be as stable as possible, should have as clear and obvious of a monetary policy as possible. And while the U.S. obviously has inflation and whatnot, they have been one of the most stable and predictable economies in the world, relative to all of these other places that are kind of going from dictatorships to democratic republics to dictatorships again. And it's just naturally, when people look for a currency to settle trade with, they want to go with the nation that is seen as the most secure. And on top of that, the biggest thing that defines the stability of the U.S. dollar and why it's accepted is obviously their military and their massive military might. That kind of ensures peace and stability in that nation relative to other nations as well, and the military-industrial complex that supports that. So, brief, shoppy history of the U.S. dollar as a reserve currency. Now we're here today in the year 2023, and I think, looking back, one of the biggest events in the history of the U.S. dollar as reserve currency, because when it eventually does collapse, everyone's going to look to like, oh, what was the catalyst? What was the key trigger? I think a big warning shot to other countries around the world was the sanctions that were placed on Russia when they launched their war in Ukraine. A war that had very little to do with U.S., right? Ukraine is not, a U.S. colony or anything like that, but they are part of NATO. And essentially the U.S. leveraged their power within NATO and their sanction power to cut off SWIFT and ACH transfers, which are kind of the main ways of settling money between U.S. banks. They essentially cut off Russia from that system. And I think, looking back in history, that is going to be a pivotal moment for people to say this might have been where the U.S. started ceding, the reserve currency, because essentially without that system, you're done. And so they seized Russian assets, they froze Russian bank accounts, they did all this stuff that it seems in hindsight like, yeah, kind of obvious, right, to do that stuff. But it does kind of question, what else could they do? What else could they do if they had a different leader, right? Would Trump have done something like that? And so it opens up this conversation that is the U.S. dollar kind of subject to the whims of the political leadership in the U.S., right? Is it maybe not as neutral as we thought it was? And so you're starting to see other countries kind of come around and discuss, should we use the U.S. dollar? And also you're seeing all these countries form other alliances like BRICS, which is Brazil, Russia, India, China, and South Africa, talking about how, they kind of wish they might have had like a different trade system, or they're trying to improve trade relations within those specific countries without dealing with the U.S. And so you have Brazil's new president here. His name is Lula. I don't know his first name. Lula Silva. Kind of saying, why should every country have to be tied to the dollar for trade? Who decided the dollar would be the world's reserve currency? Why can't a bank like the BRICS Bank have a currency to finance trade between Brazil and China, between Brazil and other BRICS countries? Today, countries have to chase after dollars to export when they could be exporting their own currencies. And so the U.S. dollar reserve currency status has been great for the U.S., but what it essentially means for all other countries is that they have to constantly be replenishing and holding reserve of U.S. dollars. And they're constantly kind of competing with whatever the intermarket exchange rate is for those U.S. dollars. Having the USD as the reserve currency has also opened up, some of these international banks like the IMF to kind of have a stranglehold on certain countries. And Lula went out to kind of say this as well, which is that no bank should be asphyxiating countries' economies the way the IMF is doing now with Argentina, or the way they did with Brazil for a long time in every third world country. No leader can work with a knife to their throat because their country owes money. And so you're just seeing a lot of these countries with their own fiat currencies not performing as well as the US dollar, and essentially that puts a massive financial strain on them to pay back loans, to do trade, to manage treasuries, and all these things. And you're just starting to see a little bit now people kind of pushing back against that. Last week, I believe Saudi Arabia settled the first trade of oil with China without dealing with US dollars. They accepted Chinese yuan for it. And typically, the oil trade in Saudi Arabia and, the massive expansion and growth there has been fueled by the US dollar, right? They've been selling their oil internationally for US dollars, and now they're saying, well, we're not going to be beholden to it. The second one, which is probably more of a flub, because Brazil, I would say doesn't have perfect relations with the US, but I think, France and especially these NATO countries kind of do have a much closer relationship, is that even France's president, Emmanuel Macron, is now saying, when it comes to global dependence on the dollar, Europe should lower its need to rely on the extraterritoriality of the US dollar. So if the tensions between the two superpowers heat up, China and US, we won't have the time nor the resources to finance our strategic autonomy, and we will become vassals. So now you're seeing France, and this is kind of interesting because he said this while he was hosting, or I think he was in China with Xi Jinping. So kind of a bad timing of all things, not to mention the whole pension crisis, which is another story going on in France right now. But yeah, essentially saying, maybe we shouldn't rely on the US dollar as much as we are. So yeah, the big question is like, what is next, right? Oh, everyone's just going to ditch and they're going to move to China. There's kind of two arguments. Is essentially, well, there has to be another reserve currency. It's going to be, these are the mainstream opinions. We'll leave Bitcoin to the end, but the mainstream opinions disregarding Bitcoin are, we're all going to move to the yuan. The US dollar is just going to stay dominant forever, perpetually, because the US economy is just going to, do what it's done for the next 100 years, like it did for the past 100 years. Or everyone's currencies are going to kind of splinter, and trade is going to get a bit more complex between nations, and you're going to see more fractionalization rather than unified globalization. Now, in terms of my opinion, I'm kind of on the latter end of all that. I think it is going to kind of fragment the way that trade is done, versus I think, the world is going to gravitate towards a reserve currency, even though I think in the long term, the world does want to gravitate towards a reserve currency. I just think between, yuan becoming a reserve currency in the next 30, 40 years, and there not really being a clear defined reserve currency, I would bet on the latter. And the reason I say that, we'll jump into this, is kind of because I think the dynamics of the Chinese yuan are a bit more complicated than people discuss. So when we look at reserve currencies, like I said in the beginning, they kind of have to hit up all these factors, right? They've got to have a certain amount of stability, predictability in the nation. They should have this global reach. The country that has the reserve currency should also have a pretty vibrant economy, strong military, right? On the surface, China does hit up all these check marks, but there's a couple things that differentiate how their currency works and obviously how their society works, which kind of has me on the fence of ever really believing that it would be kind of the standard reserve currency for the world, similar to what the US is today. So, we'll kind of dive into that here. I don't know what article it is. I won't be quoting an article too much. I kind of wrote this down to think about. But essentially, there's three factors to me that kind of define why I don't think the Chinese yuan is going to be the next global reserve currency. And number one is the opaqueness. So everything when it comes to the Chinese economy is kind of opaque. The numbers, the international community does not rely on Chinese economic numbers, GDP, things like that. We know that obviously China has been a massive successful growth story, but when it comes to this stuff, it's not independently auditable, not super verifiable, all the economic data that comes out of China. And in the future, even though China has kind of pursued a more liberal and free market policy, in their version of communism relative to other historic communist countries, they're still very opaque on things like that. And ultimately, for a country that does have communistic ideals, you can't really have a neutral reserve currency. In the end, if you need to exact power, you need to set things in line, you need to set corporations in line, you have to have things like capital controls, right? If you have a free market system, what happens is, those capitalist entities working inside China will just fly to other countries if business is easier there. And that's what's happened. And China has had to clamp down with capital controls all the time. It's very risky to start a business within China. You don't really even own proper equity in it. The government does, right? And they have Chinese stocks that trade on the stock market. But again, you know, Chinese stocks almost all the time too get busted for bad accounting practices as well. So if that's happening in the private sector, to me, it's most certainly there's stuff being covered up in the public as well. The other big thing, and Chamath Palihapitiya had a really good bit on this on last week's All In podcast, is that we sometimes think that the yuan is its own kind of like free market currency, and it's not. It's very much pegged to the US dollar. And basically the way that this works is that they have this floating exchange rate system. So when you see the price deviations of the yuan against the USD, those are not like the free market really trading it. It's essentially the central bank sets kind of this parity rate against the US dollar. And for a very long time, the yuan was actually fixed at a fixed price against the US dollar. There were no fluctuations. But eventually what they did is they allowed, up to, I think, plus or minus 2% a day. And essentially what happens is if they see it kind of moving outside those bands, what the Chinese central bank will do is they will sell yuan if like the price of yuan goes too high versus the US dollar, and then buy US dollars. So it's sort of like a version of yield curve control, but just for their currency stability. And this mechanism is not really public, so they're not really fully announcing the exact timing of when they're buying things and moving these things. But essentially, the central bank, on top of interest rate policy, really controls the exchange rate of the Chinese yuan and tries to keep it as much in line to the US dollar as possible. Another thing that the government can do there, and I don't know if it's a government thing or a central bank thing, but they can essentially just clamp down on capital flows. If they notice that people are selling their Chinese renminbi denominated assets, let's just say their Alibaba stock, and they're selling it for renminbi and they're moving it to US dollars. They can monitor all that stuff and they can prevent those outflows. And so, part of the reason that China banned Bitcoin was because they were worried that people were buying Bitcoin and using it as a very easy way to get capital outflows out of the country. Because if you think about it, they don't have to work with banks to essentially do any of that stuff. So you can take your renminbi at the time, you could either invest into Bitcoin mining or miners, or you could find a place within China to buy Bitcoin, switch it over, and then, boot it over to the US, convert it back to US dollars. And that whole system was kind of unstoppable because of Bitcoin's borderlessness, right? And so, the Chinese government has tried to clamp down on capital outflights. There's still been a ton, every Chinese millionaire or billionaire will likely have offshore capital. But, in the event of, let's just say, an economic downturn in China, if they were the reserve currency, they would use capital controls to freeze investor assets within the country. And so that's kind of like the impact it would have on Chinese citizens themselves. However, if you have a reserve currency, you also have a bunch of other dynamics at play. We all know that essentially the only way that the US is able to fund all their things and have these massive deficits in debt is because they can sell their US treasuries to other countries. And essentially a US treasury is this risk-free asset where you can get paid whatever their interest rate is and you're almost guaranteed to always get that money. So central banks, they're loaded up, all over the world with US treasuries. And if the Chinese yuan would be the reserve currency, you would see something similar where countries all over the world would have Chinese bonds, and the Chinese government would be able to basically borrow on the backs of all these other countries as well. That's kind of one of the privileges of a reserve currency. Would they do it to the extent of the US? I'm not sure. But one of the challenges in that is that, despite China never really defaulting on debt either, they could freeze investor assets if they needed to. So if there is an economic panic, a global economic shock, and one of the first things that, another nation does is say, hey, maybe we need to shore up some capital, let's sell some Chinese bonds. Or maybe there's something within China that kind of rattles Chinese external bondholders. The Chinese government could say, not happening, or we're going to delay bond payments or whatever, right? And again, they just have a much bigger track record of doing that stuff than the US does. The US pays their debts, they pay it on time, they don't typically have the same type of capital restrictions that the Chinese yuan has. And again, all currencies really are built on trust. And so I think in the assessment of the world moving to something, let's just say like the Chinese yuan, I think central banks and economists would kind of do that calculus of like, well, they have all this power to do this with their dollar, right? They can restrict capital outflows, they can restrict exchange transactions, they have other mechanisms that are very opaque. Why would we move to this? And so that's why I think in the intermediate term, I don't think that, they're just going to, forfeit the US dollar for the Chinese yuan. There's just very little benefit with all those kind of things in mind. However, as the US starts to enact things like capital controls and freezing ACH and all this stuff, people are going to look to alternatives. And essentially, it's just like what Greg Foss says about Bitcoin is everybody kind of needs an insurance policy for something like that. The US dollar kind of getting, demonetized, or the Chinese yuan or whatever. And, Bitcoin is the only neutral currency with that fully open, auditable monetary policy. And people can look at it and say, oh, it's volatile, it's volatile, it's volatile. But there's that aspect that people want in a currency. And low volatility is one of them, but also no counterparty risk is another. And it's a really, really big factor. And I think it's kind of just being, swept under the rug as important or not important. And I think, when we had that bank freak out last month, people kind of realized the importance of having a currency without another counterparty, because, the US has their tool set and they kind of contain that one when it was easy to contain. But if things get worse, monetary policy gets out of hand, the printer goes on, all fiat currencies eventually render to zero because of these types of disruptions. The temptation to print and to create money out of thin air is just too great for almost every single country, even the reserve currency countries. And eventually, too, the flows of economic activity change too. And so the U.S. has benefited from a really, massive, strongest economy in the world, strongest military in the world. But to say that dominance will last inevitably is just not really understanding history, because the U.S. has only really had this position for about 100 years. 100 years is not a very long lifespan, and it's about the same as, the United Kingdom's kind of like empire, massive control of the world. It's about the same as the Spanish or the French. Maybe it's a little bit longer, maybe it's a little bit shorter, but yeah, it's coming towards the end of the standard timeline for reserve currency dominance. And there's just all these telltale signs that something is changing, something is sinking, something is going wrong. And people are going to be looking for other options. And I just think that Bitcoin is, it's hard to base your whole system on it. And people still don't really have an idea of like, how are central banks going to exist? Are central banks going to exist in the world of Bitcoin? People's, I guess, view of that stuff is going to constantly evolve, but little by little, I think you're going to see countries try and opt out of the US dollar. They're going to benefit from Bitcoin. El Salvador is like the perfect pilot project for this, a country that is rapidly gaining back its sovereignty day by day. And that's what countries do. They take note. Empires like to mold off of other empires, right? And small nations mold after other small nations. And there's a lot of countries on Earth that are very self-sustainable, self-sufficient, do not rely on international trade. If international trade was cut off tomorrow, would have a way of surviving. And those countries, I think, are going to have the most options in kind of this changing global shift. But yeah, that's just my take. I think we're going to move into this era of fragmentation, and I think that is ultimately good for Bitcoin. The world will ultimately want a reserve currency, a standard that can be used for trade, rather than having to hold a basket of all sorts of different currencies, or some sort of synthetic basket issued by, a world bank that is really predominantly owned by the US or China or one of these things. People will kind of mask a unified currency. They're going to try and create these things like SDIs and all sorts of things, but I think eventually people are going to see the writing on the wall and realize that there is a global neutral reserve currency that does not have a central bank or an entity that can just push it in one direction or another, and it's Bitcoin. And it's good to have some of it, at least on your balance sheet, but even consider it as a currency for your country as well. So yeah, that's about it for who hates the US dollar. But yeah, short take, I don't think Chinese yuan is it. I don't think the US dollar is going to remain in power forever. I think fragmentation is kind of the next era that we move into. And it will take a while, but I think eventually Bitcoin emerges out of that as the winner. So real quick sponsor break, and then we'll dive into the quickie news of the week. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. All right, quickie news. What do we have here? Some fun Bitcoin stuff, actually. So apparently, I don't know how this works in Ontario, but Ontario has kind of these like fluctuating rates for electricity, and they've just changed it completely. But essentially, they're going to have ultra low overnight electrical prices in Ontario, 2.4 cents a kilowatt hour between 11 p.m. and 7 a.m., which essentially means if you have a mining operation and you're okay mining for 8 hours a day, you can be profitable on basically any type of machine. So you could use a Bitcoin miner for overnight heating in Ontario and make an absolute killing, not just break even, right? So that's cool. So any Ontarians living here, I think net electricity is going to cost more in Ontario because of the way that they're pricing like peak electricity and mid-peak, but overnight electricity, great to run your Bitcoin miner overnight. That's when it's coldest anyways, right? So use that heat. Next thing, so this is like a two-parter, but there is this, I think he's a senator. I'm not sure if he's a senator. Congressman, maybe. I think he's the son or the nephew of Robert Kennedy, the old Robert Kennedy. Robert Kennedy Jr. announcing that he is running #1 against Biden in the primaries. Probably doesn't have a shot at it, honestly. And he talked really positively about Bitcoin as an escape route, which again has kind of just been this theme that like Bitcoin really is breaking into mainstream politics. I think it is going to become a bigger and bigger issue, and I think that's also why, in part, that the governments are clamping down so hard on it lately, is because they're seeing, there's so many crypto holders out there and Bitcoin holders, and Elizabeth Warren is going out there and she's making posts about, I'm making an anti-crypto army or whatever. So Bitcoin really becoming politicized in the US, and candidates kind of realizing and saying these things that I wouldn't have guessed that by 2023 would be said, but he said this. Between 2008 and 22, the Fed partnered with a handful of big banks to print $10 trillion, 10 centuries of wealth in 15 years, a bonanza for the banksters. Cryptocurrencies like Bitcoin give the public an escape route from the splatter zone when this bubble invariably bursts. So the White House is colluding with the banksters to keep us all trapped in the bubble of profiteering and control. So again, potential, or no, actual U.S. presidential candidate for next year, coming out with some pretty strong words against the administration and positive words about Bitcoin. And I think he's right. It is an escape hatch. So yeah, kind of interesting. Another thing that's interesting, Argentina, we know one of the highest inflation countries in the world. Argentina now had their highest single month of inflation, 7.7% month over month. So, we talk about 7% inflation here. This is month over month. So prices are going up 7% in 1 month, or 8 almost if you round up. So 104.3% annual inflation now. The cost of living reached 21.7% of an increase in the first quarter of the year. This is with their awful currency. And side effect of that, Bitcoin in Argentina is at all-time highs when denominated in their currency. So look at that chart. To me, this is just a prediction of what the US dollar price is eventually going to look like for Bitcoin as well. So yeah, interesting chart analysis you can do when you're calculating Bitcoin in other currencies. Speaking of weird things going on, the lead attorney for FTX came out and said that they had found $7.3 billion of assets. And so this is much bigger than literally 2 weeks ago when they had said they'd only recovered about 1.4 and that they had about another 1.3 they were going after. Now it's 7.3, and the total assets missing from FTX I think was about 11 billion. So they've recovered almost 70% of the missing assets, and now they're even debating about reopening the exchange. I think that is a shot in the dark. I think that's ludicrous, honestly. But they've fielded the idea out there. It would be pretty insane given that the brand image is destroyed. However, if they do reopen, maybe my hat will be worth something. I still got one of these. It's gonna be like a memorial thing. Yeah, I gotta wear this to like a Bitcoin conference. I think I'd get some looks from it. But yeah, if they relaunch, I don't think they would call it FTX, but you know, everyone would know that it's kind of linked to it. But yeah, that and the FTT token pumps, you know, 100%. If you were an insider and you knew that Andy Dietrich, the lead attorney, was going to say this, you could have made 100%. And I'm sure, knowing that there's corruption up and down the ladder, that someone did. All right, let's go into a funnier story here. This was on the front page of Reddit. Here, I'll just play this. It's a quick clip here.
You're still wearing your engagement ring, huh?
Yeah.
Yeah?
I'm gonna give it back to him. Do you want it now?
Sure. I mean,
Don't give it back.
Well,
No, I'm not gonna keep it. Here.
Thank you. That's a Bitcoin.
That's a Bitcoin, baby. It's the way we gotta look at the world, you know? So he's back. The man's back. All right, Clown World story of the day. Hot sauce stuff will return. Don't worry, I just don't actually have any out here. I do have a spicy take, but I'll save it for next week. Germany, which, you know, they've had a big challenge with the energy crisis. The cost of gas and all that stuff was crazy. That's kind of abated, actually. The price of natural gas has just dropped tremendously. I don't know the big reason, but it's like really, really low right now. Very volatile market, much more volatile than Bitcoin. But yeah, the German Green Party got their way. They recently took down 3 nuclear power plants. And now they rely on coal for, you know, the most part of their energy mix since about, in the last 6 years. Sorry, I got to rephrase that. Coal is not the primary energy in Germany's energy mix, but they are now mining more coal than they have in the last like 6 to 10 years, just to kind of bridge the gap. We got to remember that as they're expanding their, you know, efficacy into renewables, you have to break down what those renewables are. If they're solar and wind, those things are kind of intermittent sometimes. So that always needs to be balanced out by at least something that can be 24/7. And so that's going to be like a fuel source like coal or oil. And yeah, mining coal. So yeah, this is what powers your electric vehicle. Clown world of the day. That to me is kind of crazy. But yeah, I mean, we can make this move to sustainable, you know, driving and things like that. But ultimately, if we don't know what our energy mix is, we could actually be polluting more versus, you know, just the carbon that comes out of our car's exhaust pipe when we're taking coal to power those electric cars instead. All right, last story, real quick here. Okay, so let's talk about really short, big banks getting into Bitcoin. This is almost more of a quickie story. We'll jump into the chat. I don't know how many people are watching, but Canada's 6th largest commercial bank acquired a large sum of MicroStrategy shares. And you're kind of seeing this lately, that a lot of these big financial institutions in the last 3 months are scooping up MicroStrategy shares. And I think even to this day, Michael Saylor still owns like 45% of it. But I think the consensus here is that a lot of these, big holding companies who have clients who want to get exposure to Bitcoin, their financial advisors are saying, skip GBTC, right? Because that's an OTC stock. Maybe skip the miners because they're very volatile and they actually, can perform worse versus Bitcoin, much worse in the long term. Go with essentially the pseudo Bitcoin ETF, which is MicroStrategy. And so kind of the big news that came out was that Bank of America Securities now has purchased up 2% of the entire float of MicroStrategy. And with MicroStrategy's recent purchases of Bitcoin, they now own 1 in every 150 or 140 Bitcoin that will ever be made. So they're as good of a candidate for, the Bitcoin ETF as any ETF that's on the market right now. I think second to maybe Grayscale's Bitcoin Trust and maybe something like Block One, which is a privately held company, no other entity has as much Bitcoin as MicroStrategy does now. And so, whether you love Saylor or hate him, you got to admit his strategy of purchasing it, doing it with these like really low bonds, having really good terms on them, tender offers, all this stuff. He's accumulated a ton of Bitcoin and he's done it on a discount a lot of the time. And yeah, he's in the green right now. Who knows how long that'll last, but yeah, now you're seeing other companies basically bolster up his stock's price because they're looking at it as a pretty well managed version of an ETF that can kind of exist and they can purchase on behalf of their clients. So yeah, Vanguard has 9% of the float too. So that's interesting. All right, that is it for today. Thanks so much for tuning in, guys. We'll dive into the chat here. Hope it played out. Hope you guys could hear me. Hope everything was kind of crispy. And yeah. All right. Just for real, I have one viewer right now? Damn. Thank you, one viewer. I wonder why this stream didn't make it out. So whenever I skip a week, I seem to have problems getting people to watch, but that's okay. Praveen in the chat. All right. What is the difference between the height of the wick and the height of the candle? Good question. So when it comes to technical analysis, when you see a wick, that means that well, every candle represents a time frame. So a candle can represent a minute, a week, whatever, right? It just depends on what you have set. But a wick essentially means the top of a wick means essentially within the parameters of that week, the price, the maximum price, the highest point of the price was at the top of that wick, and that the lowest price was at the lowest part of the wick. And then whatever the actual candle bar is, like the meat of the candle, is essentially the opening and the closing. So if the candle is green, that means that the thick part of the candle, the bottom, is the price that the candle opened at, and that the top of the candle, of the green candle, is essentially where the price closed for the week. And the wick just shows, that was the maximum range of that week. So yeah. So unlike other countries which have to earn USD by exporting their goods, are you saying the US can just print and pay for the wheat, flour, or oil? What does that mean for producers in the US? It's not that, it doesn't quite work like that. Essentially, if you want to earn, well, first of all, the average citizen, the average person who conducts trade, if you're an exporter, you ultimately are not typically holding a massive reserve of the US dollar, unless you're like a US based South American country, right? And that's your currency. If, let's just say, I'm in like Sri Lanka or India or something, and I'm exporting goods to the United States, I might ask them to pay me in US dollars. I might keep some of the US dollars, but essentially I am going to, transfer most of that into rupees, because that's essentially my country's currency, right? I need to pay shareholders their dividends in that, my employees in that, other people who provide me my goods. So, I'm not going to hold US dollars. Does it mean that the US can just print and pay for wheat, flour, oil? And again, technically, like, the US, can create money out of thin air, but they do it through a mechanism called quantitative easing, which is essentially they just sell debt, right? So they might be creating new money, but they're not necessarily like instantly diluting the money supply by just creating it out of like X, Y, or Z. They are trying to offload the other part of their balance sheet. If they're creating a liability, they're trying to create an asset out of it too, which is, a bond or something. So it's printing, but it's not printing, right? Countries that print without actually creating any debt instruments, that's real printing. Does it not make sense to produce anything in the US when they can just buy it from overseas producers? Well, no, because essentially, like, it's not the government that's just buying everything, right? And if you were just infinitely printing money to buy things, you would devalue your currency over time. So, people in the US are making US dollars through trade and commerce, and they're using those US dollars to buy things from overseas producers. And it's the same with the government. They, despite inflation and, quantitative easing, they still make trillions of dollars off of the GDP of the country from tax revenues and so on. And so those are earned US dollars in the economic sense, and they use those to buy things from overseas producers. But yes, in a way, you could consider that when the central bank infuses liquidities into banks, or liquidity into banks, those new loans that go out, that are kind of given out frivolously, have the same effect as printing money, because essentially you're giving money out with basically very little strings attached, just the idea that you have to pay it back at some point. That point could be indefinite. Businesses that were struggling under COVID. Oh, I think I got disconnected here. Sorry, I got disconnected here. I will rephrase what I was saying. I think a good example of what can look like money printing is when the government gives out these loans that they don't really ask to get paid back, and companies take these loans and they go out and they buy things with them. So it's essentially US dollars that don't really have any responsibility attached to them. The government just dismisses the debt, and these companies go out and they inflate the cost of goods because they're using money that they previously, didn't really have access to, and they were just kind of gifted or granted. So yeah, that's it for the show. Thanks so much for tuning in, guys. Hope that worked out. If there were more people here, I'd give a tour of the cabin, but it's still a work in progress. It's always a work in progress. So is life. So is everything. But yeah, thanks so much for tuning in. Take care. I may or may not be back next week. I am doing a video. I don't know the exact day I'm leaving, but I am going to Ottawa at some point to do a video, a surprise video, which will be kind of cool. So yeah. And of course, I'll be back, the week after or whatever. And we'll try and do like a mystery guest show. That was fun that one time we did it. That was a couple weeks ago. We'll try and do that one again. But yeah, thanks so much for watching, guys. Take care. Have an awesome weekend. Enjoy the sunshine. It's starting to come out here on the West Coast. And it's beaming down on my shirt right now. So yeah. All right, everyone. Peace. Have a good one.